Hey traders, welcome to FSC-Capital. My name is Shah Chowdhury, and ladies and gents, if you had watched my last week's video, I showed you a trading opportunity on the pound yen using the I.P.D.E process, where you would have banked a whopping 241 pips just on that trade alone. Please take a moment to subscribe and hit that bell notification, as you will automatically be notified every time I upload a video. If you haven't watched last week's video, don't worry, don't panic. I will leave the link below. This week I will go through the same process on the pound New Zealand, so stay tuned. I'm going to roll the intro and disclaimer and we can dive right in. Okay traders, it's amazing how I've seen so many traders with so many indicators on their charts making their own trading so complicated. They overcomplicate things when you don't have to. I'm going to show you a simple process where you can remove subjectivity from your trading, keep it simple and trade. People overcomplicate things and miss constant opportunities in the market. You don't have to do that. Okay, now if you know how to read price action, then you know what higher close and higher highs, lower lows. You know how to read it, and that's what we're going to go through at the moment. So we're going to identify whether this market's bullish or bearish, or if it's testing a major level of structure. And the way you do that is you can get your tool right here, you can get your trend tool right here, and just start drawing in higher high, higher low, higher high, retest of the low, higher close. We've got an outside return, higher close. We've got an outside return, and then we make a lower high because this high is lower than your previous. It's failed to go and retest the highs or break above and close above, and we get a violation of structure. We've violated this level of structure looking left, this level of structure looking left. Okay, so we've got a violation of structure, but what's interesting is where price is currently testing. If I remove all of this drawing tool, let me just go ahead and remove all of that and draw a horizontal line straight down where price is testing currently. And it's quite interesting where price is testing because we've had many tests at this level. We've had rejection candles. You can see clearly rejection candles acted as support. Now we've come back to that level at 87.69. Now I'm expecting, we've had a violation of structure. Now we can't call it a bearish trend just yet because we need that 1, 2, 3 move. And what I mean by that is we've had one violation. Okay, we need a pullback and we need another violation of this structure level. So we've got the 1, 2, 3 move in order for it to confirm a bearish trend. But what I'm expecting is, let me remove that as well again. What I'm expecting is a retest of the lows, and we've not had that yet. So I'm going to drop down to the 60-minute time frame. Let's drop down to 60. So what we've gone through at the moment is we've identified that we have tested a major level of structure. We've predicted price is likely to come and retest the lows. It's decision time now. We need to decide how to get involved, and this is where your strategy comes into play. Now you can look for a double top at resistance, you can look for candlestick formation. It's all depending on your trade plan. Okay, and one of the patterns that I trade, well, two methods that I can actually enter this market is, one, look at the previous outside return, which is from this low to this high. Sorry about the color scheme here. Let me change the color scheme here. Just remove that completely. There you go. So now, okay, I can look for a lower close and short this market, but my stops would have to go above these highs. Now, do I get a 1-to-1? I get more than a 1-to-1 if I'm getting a retest of the lows here at 87.28. but my risk is going to be humongous, okay, because I'll have to have an ATR above these highs, and I need price action to actually push a bit higher before I can short this market. Now what you can say is, what about this zone right here? Let's draw another zone. This zone right here. Okay, now what you can say is, I'm expecting the price to come up here and you can short this market aggressively, but I don't need to do that either, okay, because under my trading belt I trade the advanced pattern. I trade an advanced pattern, which is the bat pattern. Now my rules do get met, but I do need price action to push a bit higher. Now if I draw my fib levels from high to low, okay, and I get my 50% ratio on, you'll see that 50% does get hit. Let's get the 50%. Let's take away the 38.2 and get the 88.6 on. Now you can clearly see that my 50% ratio does get hit, which puts me on a bat alert. You've got your X leg up here, X to A. Okay, you get your A to B leg, which is the 50%. You get a pullback, and then your D completion is at the 88.6. There you go, 88.6 is your D completion. Once again, your stop loss needs to go above X. Now depending on your rules, stop loss, I use the 113 inversion, but stop loss has to go above X, and your targets, traders, is from A to D, and where my targets will be sitting is at the 38.2 and the 61.8. so I'll be taking two positions. Let's get all of that off. We want the 38.2 and 61.8, and let's get the 50% off now, because we already know that it's hit the 50%. There you go. So once I'll have my orders set here at D completion, my stop loss is going to be at a 113 inversion above X. My first target is at 88.52s. My secondary targets will be at 87.98. And it's that simple. Okay, it's that simple. We've decided how we're going to get involved. Well, I've decided anyway how I'm going to get involved in this trade. Okay, and as soon as it hits my D completion, I'm going to execute the trade. I'm going to put in my orders straight after this video. Well traders, I hope you enjoyed this video. Please hit that like button if you did, subscribe and hit that bell notification too, and until next time, hope you stay well and wish you a prosperous week in the markets.